Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. It's our market update episode, and this week we're going to bring you surprising data on house prices. At least it surprised us. We're going to give you our personal insights of what we are seeing in the market that's not being reported elsewhere, and we have great news on mortgages.
Yes, thank you for joining us. In case you don't know, we run a company that does over £100 million worth of property deals every year for our clients. You can find out about that at propertyhub.net/invest, which means we're out there active in the market, seeing what's going on. So as well as reporting all the news you need to know about this month, we're also sharing some insight of our own, including sharing a deal that we've done that we are very proud of. So make sure you stick around.
We often start with house prices, and why change a successful formula? Well, we might want to change it if we keep getting numbers like this. Rob, nationwide, says prices are down by 0.6% in April. March, it was flat, 0, but in April, it was down by 0.6%. Should we start to get worried? That is the question.
Not according to Robert Gardner, Nationwide's chief economist, and who are we to argue with him? He said basically this is what they were expecting, and it's because of the stamp duty change. So the stamp duty bans reset recently, and whenever that happens, whenever there's a change to stamp duty, you always see the same effect, which is basically demand gets pulled forward. So everyone rushes to transact before rates change, solicitors get very stressed, and immediately afterwards, there's a drop-off in activity. So he's saying basically the market has softened a bit as a result of that, but he sees it picking back up over the summer, especially if mortgage rates continue to come down, and we'll be talking more about that a little bit later on.
You know what, Rob? I think that's a real title, that chief economist. Economist sounds good, but a chief economist.
Chief economist, yeah.
I want to be called a chief podcaster. That'd be really good. It just carries more. Yeah, well done on your title, sir. Right, next. We have asking prices. So are they on a decline as well? No, they continue to increase. And this is according to Rightmove, who say we've seen our first price record in nearly a year, despite the number of homes being for sale at a decade high. And that's really interesting, Rob, to have a decade high in supply and asking prices still being pushed upwards is quite interesting. You wouldn't expect that to play out, but here we have it. The optimism is there for now. They're saying the market resilience is there. You could call it resilience, maybe. We'll see. You've got to carry this on for a little while for me to declare it's a resilient market. But it's certainly an optimistic market. And optimism is good because if sentiment is positive, that's normally useful. And that's what we've talked about a lot, how important sentiment is. So in terms of sellers at the moment, they feel optimistic about what they can do and what they can achieve.
Yep, resilient, you can call it. Optimistic, you could maybe call it, but definitely price sensitive is the word. And that's a phrase that they use. Basically, no one's in the mood to pay over the odds right now. So what Rightmove is seeing is that properties that go on at the correct price, that are reasonably priced, they're going to sell more quickly and they're more likely to find a buyer at all, compared to your classic case where the estate agent gets optimistic, they put a big price tag on it, then they have to make a cut. And by that point, it's been sitting on there for a while, everyone's seen it, and it doesn't find a buyer. So a resilient market, but far from being a frothy market, despite those all-time highs. And speaking of price growth, there's a really interesting article in the FT by Neil Hudson, where the headline is UK house price growth a thing of the past? And it makes the point, as we've commented on the podcast in the past, that the long-term growth trend for UK property is at its lowest level in 50 years. We've looked at a similar data point in the past about how long it takes house prices to double and how we are now in the longest doubling cycle ever, and we're still nowhere near that doubling taking place. So it's asking, well, is that it for growth now? And won't talk about it too much more because there's enough in here that we might do a full episode about this in the coming weeks, Rob. But what I think is interesting is that it's talking about degrees of growth from here. There's absolutely no talk about price falls from here. And Neil Hudson, who's written this article, is not one for pumping up house prices. He tends to have a more sober view of the market, you could say. But even so, not countenancing a drop in prices from here. But really interesting article. We'll link to it in the show notes and maybe saying more about it on the podcast soon. But Rob, as well as reading everything that's going on in the media, we're also out there in the market. Our team is out there every day, speaking to developers, speaking to sellers, speaking to investors, and we gather some insights of our own. So what stood out to you from your observations over the last month or so?
I love doing this part of the show, Rob, because I feel we're almost ahead of the news. Before it's actually reported, the data's out because you're seeing it in real time. And what I've really noticed recently is that developers in pretty much all regions are up for doing a deal at the moment, which is amazing. We're being super picky about what deals we bring through, and our clients at Property Hub Invest are benefiting from that. But there is one area where it's been really hard to do deals for the last 6 months. Really hard to do deals. And we've worked super hard just as hard as the other areas, but we haven't really put anything together yet. Anything that we've been happy with anyway. And that area is the Northwest. So when you see data come out over the next few months, I think we're going to see that the Northwest is performing particularly well because sales are happening there. That's why the developers aren't as keen to do a deal, because we'll inquire about the site and they'll maybe want to talk about it, but they'll say, but what about this one over here? And those areas are great as well. Fundamentals are great. And this could be just a short-term thing, and almost certainly is, because the markets move around and what is good this year will be different next year. But this is where we're at right now. So here's my bold statement, Rob. Expect the data to show in the next few months that of all the regions in the UK, the Northwest is the strongest performer for house prices. We will see. And with all that said, Rob, I'm absolutely delighted that we have finally put a deal together in the Northwest, and not just anywhere in the Northwest, in Manchester city centre. And when I say city centre, I mean slap bang in the middle. Probably defines the middle of Manchester. If you put a pin in it, this is where this development is. So we've managed to do a deal in quite a warm, maybe even hot market, and credit goes out to the team for doing that. It's a fantastic deal. Our clients at Property Up Invest, you haven't seen it yet, so don't panic. You will see it in time. But if you've not contacted Property Up Invest before and you want to find out what we do and how we work with investors, then maybe now is the time. Check out propertyhub.net/invest.
Yeah, that is a very special one. It's not the kind of thing that comes along often. I don't know if we will see anything like this again in Manchester City Centre, the way things are going, but very glad we have. And I agree with you on the Northwest. If I can just talk ourselves up a bit, we were talking about Manchester a very long time ago before it properly got going. Then we started talking about Greater Manchester and the wider Northwest. And now that's clearly really getting going. That doesn't mean it's the only place to invest. And I think it's really important not to lock on to a hot area. Like you saw people do this with London many, many years ago, when London was the only thing people were interested in because it was doing so well. Now, I think there's a danger of someone newer to property like getting absolutely locked onto the Northwest. And what I would say is, no, there are good deals to be done in lots of different places, to take every deal on its own merits. But the Northwest is undoubtedly strong based on lots of metrics at the moment. So we'll move on now to talking about the rental market. And Rightmove put out a quarterly report into the rental market. And unsurprisingly, rents have hit another all-time high. Rents are pretty much always hitting an all-time high. But it's the regional variation that stood out to me. When it's talking about demand, it's talking about the inquiries per property. So the average number of inquiries per property across the country is 12. This time last year, it was 16. So the rental market has cooled off a bit, still very strong, but it's coming back to something a bit more normal. But from an average of 12, in London, the average home is seeing 8 inquiries. In the Northwest, 18 inquiries. So Rob, clearly it's not just trying to do deals for purchases. The rental market in the Northwest is super hot as well.
Sticking with the rental market or the rental sector, we've got an interesting story that we're taking from Landlord today. And this is that the activist group Generation Rent is complaining about the number of landlords requesting for a guarantor and it becoming almost the norm. It found that there has been, over the last 5 years, a 50% increase in guarantor requests, from 26% up to 39%. That's much higher than I expected, Rob, and we've got to be careful with these type of things, because what areas have they carried the survey out? If it's an area where the tenant profile is considered a higher risk, then it may be the case that this is miles away from the national average, but quite right for the area they have surveyed in. We don't have that data. What I'm not surprised by, though, Rob, is that it's gone up, because rent reforms have certainly put things more in favour of tenants. Some parts of those reforms are welcome and quite right, but other parts are not as welcome. And what is absolutely crystal clear now is for investors and landlords is that they get a great tenant, because if you don't, it can cause you some pain. And I've quite dramatically shifted my view on this after being an investor for a long, long time. I don't want to put a date on it because it'll make me feel very old, but a long, long time now. I've never taken out any type of landlord insurance, and now I'm going to start doing it. And actually, I'm working through quite a difficult situation with a tenant at the moment, so it's really cemented my view on that. All the insurance I haven't paid for the last many, many years has been eaten up by this one tenant, so it's kind of evened out anyway. But with all the changes, that's a move I'm making, so I'm not surprised to see the market moving this way with guarantors as well.
No, exactly. I mean, really, by complaining about this, they're just denying basic reality. Because say you have got a property in the Northwest and you're getting those 18 applicants for one property, then what are you going to do? You're not going to pick names out of a hat. So you're going to look for whoever you think is the strongest prospect. And all the mechanisms for making that decision are being taken away. So previously, you'd look at, well, who's willing to pay the most? Well, you're not going to be able to do that anymore because you're not going to be able to take offers over the asking amount. If you're a bit worried about someone, you might ask them to pay a certain amount of rent up front. Not going to be able to do that in the future. So what are you going to do? Obviously, you're going to take as few chances as possible. And if you're not absolutely sure because the consequences are so severe, you're going to ask for a guarantor. So what's next? You ban guarantors. And then what? There is always, or there seems very likely to be for the foreseeable future, a mismatch between demand and supply. And you're always going to have landlords, whoever those landlords are, whether it's individuals or companies or whatever, making business decisions and trying to minimize risk. And there will always be some kind of mechanism for making a decision about who you rent to. And it seems like Generation Rent will be there to complain about all of them.
But we will bring you those complaints as they are delivered, because it's always interesting to report on it. Let's move on to mortgages. And the big news, before we get into the specifics of mortgages, is that a base rate cut has happened. Interest rates have been dropped to 4.25%, we think. The reason I say that is this goes out on Thursday, and the Bank of England will today and make that announcement. But the market is so committed to it being dropped to 4.25% that anything else will be a big surprise. So if rates are held, then that will be a surprise. And if it's cut any further from 4.5%, then people, again, will be surprised. So the market is absolutely pricing in and expecting 4.25%. You probably now know if that's happened or not. But if it hasn't, it's a shock, it's a surprise. And that will move the market either positively or negatively. And anything else but that number will be a big surprise. But Rob, for the purposes of this record, let's assume that's happened and let's look at mortgage news.
Yep, we are so confident we're not recording an alternative version of what you just said. We're not going to drop in a last minute edit. So we need to hope that the market is right. But lenders certainly think that's going to happen. We've seen absolutely tons of rate cuts. All the big lenders cutting rates over the last couple of weeks. Lloyds, Halifax, TSB, Barclays, NatWest, RBS, HSBC, Virgin Money. That's pretty much all the biggies cutting their rates. Lots of the building societies and the more specialist lenders are making cuts as well. And the one that really stood out to me, Rob, was the Mortgage Works. So the headline is that you can get a sub 3% loan. Imagine that.
That is bonkers. Yeah.
It sounds incredible. Now, as you read into the small print, that's for 2 years with a 3% fee. And it's only up to 65% loan to value, but still not bad. And if you look at something more representative of what our typical property hub investor client would go for, so a limited company 5-year fix, that's 4.84% with a 3% fee. So the rates come down, but Rob, we're seeing fees come down as well. So a 3% fee, historically, if we were recording this a few years ago, we go, oh, that's a bit high. But typically, over the last couple of years, we've been seeing the equivalent of at least like 1% per year. So for a 5-year fix, you'd expect to see a 5% fee. But now you're getting sub 5 with a 3% fee over 5 years. It's looking a lot better already.
It is. And this is great news if you're an investor, because rents are on the up, as we're reporting. The demand is absolutely there, as we've reported in this episode. And house prices aren't moving. So your yields are improving, your mortgage costs are going down, so then your net return is improving as well. We're in a bit of a window where it's quite attractive at the moment, Rob. And I think we're going to see mortgage rates drop even further. But that's just my opinion. Well, let's ask an expert. And we're going to have an expert on the podcast later this month. We'll bring you a mortgage market update because it's quite a good time at the moment. And when it's good, and it hasn't been good for a long time, we definitely want to get an update. We want that positive news coming to us. We've reported enough when it was difficult. So let's have a positive episode. At least I hope it is. So we'll have one of our mortgage experts on later this month, bringing you up to date with what is happening in the mortgage market.
Yeah, very much needed because there is so much going on, as well as rates coming down. Also, in other positive news, we're seeing changes to stress tests. So Accord, which is quite an important buy-to-let lender, recently weakened their stress test, which according to their press release about it at least, means that they're going to be able to lend on average 15% more. And that's not them going rogue. This is something that's happening across the sector. Post 2008, we've seen lots of protections put in place, lots of restrictions. Now the regulator is gently saying that it's okay to ease off on those a little bit. And cynically, you could say, yeah, that's because it's inconvenient and people want to make money again. And maybe that's a little bit true. But I think also we need to bear in mind the reason for having those tests in place was to protect us from a spike in interest rates. And now we've had the spike in interest rates, so it kind of makes sense to go easier on the stress tests. So again, that's something that we'll be focusing on in our mortgage market update in a couple of weeks' time.
And finally, a really interesting report from Knight Frank on the build to rent market. And this report believes that build to rent could make up 30% of the rental market, with 70% in the hands of individual landlords. Now, you may listen to that and go, okay, fair enough, that seems like a reasonable split. What makes it newsworthy is what the split is currently, and this may surprise you, but build to rent only makes up 2% of the rental market at the moment. So 2% of rental homes comes from the build to rent market, with 98% coming from individual landlords. And that's quite a shift in the market. It may take some time to happen, and I think the trend is right. It's only going to increase because it started from such a small base right now, and we can see the amount of build to rent schemes coming through. But that would be significant, going from 2% to 30%. I think the trend is right, Rob. It's going to be fascinating to see in the coming years whether it can carve out such a big section of the market, because that's going to require a lot of homes to be built and purchased to get to that number.
Yeah, it's not going to happen quickly. That is a big shift. And it's very much based on what else is going on in the market. So right now, because demand from investors and residential buyers has been weaker, we're seeing more developers willing and keen to develop specifically for these build-to-rent operators, because they want to know before they even start that they'll be able to sell the stock. When the rest of the market picks up and maybe there's more money to be made over there, maybe that'll drop off a bit. So this is possibly going to be a counter-cyclical trend that plays out gradually over time. But I think it is inevitable now. I think the banks and the pension funds have got over their fear of residential because of what happened to commercial property over COVID, because of how resilient residential has been. They've got over their fear of managing lots and lots of small units. They've seen that it can work. So it's a trend that's only going to continue. And you know what? If that is what the market ends up looking like, if it's 70-30 and tenants have got more choice about who the landlord is and the type of property they want to rent, the quality of property and all the rest of it, then to me, that's only a good thing.
Let's keep bringing you good things in the form of Hub Extra. You think we were done? No, we're going to give you even more right now. And Rob, this week, Hub Extra comes from your good self, and you've been to see a show that you want to recommend to everyone.
I have. I've been to see Starlight Express, and it was so good. It was my favourite when I was growing up. So I was excited to go and see it again with my own kids all these years later, but a bit nervous because I didn't know if it would stand up and if the new version would be any good. But for me, at least, I'm not a connoisseur of these things, but for me, it was great. It was great fun. It was an incredible spectacle. The arena, which is purpose-built for it, is fantastic, super modern, really nice. What they've done with the lighting and the sound, everything else is incredible. So I thoroughly enjoyed it. Big recommendation from me.
Well, awesome. And you have a big recommendation from me. That is to make sure you join us on Tuesday for Ask Rob and Rob. And check out our weekly answers in the Sunday Times in the home section. Yeah, you'll see us smiling back at you in the paper, where we are picking up at least 2 of your questions each and every week. And of course, we'll be back with the main event, the Property Podcast, next Thursday. So until all those wondrous events take place, take care, have fun. Bye-bye.
Bye-bye.